Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 27th of September. It's been a fairly choppy week in markets, although they did manage to regain some poise as the week wore on. Obviously, there had been concerns around the Chinese property developer Evergrande and a potential default, although hopes are now growing that perhaps that wouldn't result necessarily in global contagion in the property sector. Most importantly, perhaps the Federal Reserve meeting from earlier in the week, investors took some reassurance from the fact that although tapering is still likely to happen towards the end of this year and maybe even be completed by the middle of next year, any interest rate rises remain on the horizon and are likely to be incremental rather than upsetting potentially the economic growth that is being seen in the States. Similarly in the UK, of course, with inflation at elevated levels, the Bank of England is saying that we're getting near to the stage where we're going to have to consider interest rate rises, although the consensus remains that any such rises won't happen until next year. Been a fairly good week for the beleaguered tourism sector after the lifting of some international travel restrictions. The likes of British Airways owner International Consolidated Airlines has seen a 21% hike in their share price over the last week. And indeed, in terms of the UK economy, the FTSE 250 continues to be the star of the show in the UK. It's up about 16% in the year to date. Turning to the other indices in the year to date, Dow Jones is now up 13.6%, S&P 500 18.5%, Nasdaq 16.8%, FTSE 100 9.3%. So turning to next week, a couple of companies to keep an eye out for. Half-year numbers from Next. They've had a pretty good run, 36% rise in the share price over the last year. When we last heard from them in July, they managed a profit upgrade, which was positive for the share price. This was largely driven by a growth in full price sales, so they hadn't needed to discount a lot of their lines to shift in inventory. Also keep an eye out for whether the sales surge in stores since their reopening has continued, the situation on their cash surplus, and also any particular news on a potential special dividend. Also, full-year numbers from Smiths Group, another FTSE 100 company, shares up just 4% or so over the last year. They've recently announced that they'll be selling their medical device business for $2.7 billion to the American firm ICU Medical. That will leave it to focus on its core industrial technology areas. So 2020 sales were somewhere around £3.5 billion. So we'll see how the numbers compare when we hear them. It's also worth having a look at their biggest business subsidiary, John Crane. It accounts for around 1/3 of sales, and by geography, the US, of course, accounts for around 40% of sales. So we'll see what sort of impact that's had on Smiths Group. It has been slightly held back by headwinds, given that it has exposure to the aerospace and energy sectors. So any update on the outlook, of course, will also be welcome. Thank you for watching. Have a great week.